Good morning. Happy hump day, Fed day, Kabuki day. Good morning. The sound check is in. Thank you very much. All right, let's rock and roll. Okay. Here's the story. So, whether they get very far this morning before the Fed or not, we don't know. For now, it's pretty quiet. It's been pretty quiet in the pre-market. Even with the PPI data shuffle, they didn't really get very far. They got nowhere. So, we'll take the market at face value to get the day started. And here's the support and resistance areas. Okay. 436.35 down to a spike of 435, 435, 85. That's their first area of support. Can they come down all the way to 435? They can. We don't know that they will or they won't. They can do the spike this low and rip it back. They can spike this low and rip it back. They can come fill the gap. Again, we don't know until we know. I'm just giving you the whole thing. You should get a bounce from 436.35 down to a spike of 435, at least initially. Okay. Price is a little above there now. If they come down for a test, it's reasonable. All right. We'll put 435.85 up there as well. Okay. Because that is a zone. All right. Below that opens the door for 435. Now, the other side. What if they spike them up? Same 437.90 to 438, a spike of 438. That's your first area of overhead resistance. There's another one up in the 439s. That's the other side of a zone if you want to create a zone. Are they going to run away all the way up to 439.45? That's the number. I don't know. It's unlikely, but anything can happen. So with that, we'll call it a zone. We're aware of it, but the resistance area is still going to be 437.90 to 438 spike. Okay. 3 stocks on the move today. It was pretty quiet out there. There was a couple of healthcare names moving, but prices were too far away. So I'm aware of them. I'm watching them. Humana, UNH, these are $400 or $500 stocks. The price was too far away for now, but we'll see. I'm watching them. I got them on my radar screen. CVS below the first number. Okay, let's see what we got. So we'll put CVS up on the board, and that's not the right number. That's old. 6803. All right. And the first number, 6937, but they're below it. We'll put it up there. 6937. 6699. Call it 67. Yep, Tesla's still going. Told you, don't short Tesla. Now, all that pre-market stuff is lack of participation, so the moves can be bigger. I wouldn't pay attention to it. We got Big Mo, 30 cents away, not too bad. And CNC is also below numbers. All right, we're getting ready for post time here. Here it comes.
All right, CVS opened above the second level, now just hit into it. It's now dropping below the second level. CNC hasn't opened yet.
That's okay. Just let the market do its thing. 67 is a pretty good spot for CVS. What was that, Jordan? I'm sorry.
CNC is likely to have a pretty wide bid-ask spread when it opens.
Yeah, they're trying to find a balance there. Be careful with that one. Let that one open. Don't do anything in the first second. Spider's hovering. Just let the thing open. Patience. We wait for the thing we want. They fill the gap. No big deal. They were only a couple points above. Let them come down a little bit. If they do, it's an opportunity for a snapback. If they don't and they go up, it's an opportunity for a short. And we just wait. Patience pays. 436.35 is the first place.
CNC looks like it's printed at 64.21. It is trading now. It is below the second and above the third level. The spread isn't too wide. It's only about 10 cents. But it looks like they're working through a backlog of orders at the moment.
I'm going to put this up on the board too, just so we know if they hit it and bounce, that's a place of importance, right? There you go. Since we're only at the third number, whoops, there's your next one. Spiders didn't get to the number, rip it back up. That's fine. Just let them do their thing. They'll give us something or they won't, but we're only going to wait for the thing we want. I'll come back to that one.
It stopped 1 penny short.
All right, I was locked and loaded in CVS. Not that it won't work, not that they won't go down, but I can't wait any longer. I got to focus on this other stuff. I didn't want to get left out. What were we saying? Mo came up 1 penny short?
1 penny short. It hasn't bounced a ton yet, but it's starting to get a little bouncy-ish.
44.52.
It came up at 44.53.
Yep, that happens. CVS. Okay, Jorge, that's fine. Nothing wrong with that. There you go. Yeah, they just didn't get to the net. I was down here, locked and loaded. If you're in CVS, they got to get above 68 and they can run a little bit. Same 436.35 to 435.85 is still okay if they came down. That's still a zone. Let's see what we have in CNC. Okay. Saw Mo coming down again. There you go. The first number was no good now, but the second, I know you can't hear me very well right now, 43.85. There. That looks like a big space, but it's not. Anybody take CNC? We got some players in CVS, I know that. Anybody in CNC? What about QQQ? There you go, Will. CNC double with a trailer. Great job, Shannon. Well done. So the Qs are coming down a little bit. Where's support? Spike of 362. Where's the better support? Is a spike the low and rip it back through a spike of 361. You can call it a zone, but this is better. Spike of 361. Now they're bouncing everything. No, it doesn't work like that well. I know it appears that way, but it doesn't. We don't want to draw correlations. We don't want to do cause and effect because it's just not real. It appears at times, which gives you the false sense that it is. And what we're talking about is Tesla's coming down too, so the Qs will fail too. Not necessarily. If they're going to go up, let them go up. There's a short up there. Just be patient. It's quiet, and it's kind of like Monday so far. Wait for them to do something we want. I know it's hard, but you have to. Jesus, CVS, nice job. Well done. All you players in CVS, Jorge, look at that, 2,800 bones. Dirk, yeah, there you go. Look at that. By the way, that's why I was locked and loaded. I knew where we were. You don't hear me say that about a lot of stocks on the move these days. I'm trying to focus on you guys and opportunities that we've got in front of us for everybody. It's hard for me to focus on my own trade. And I've said that before, but there's a lot of people that haven't heard that before. So, I'll take the ES trades more so than the stocks on the move. But guess what? I was locked and loaded. That was a good spot. Nice job, folks. CVS. Nice bounce in CNC. How about Mo? Well, maybe she comes down, maybe she doesn't. We'll see. All in all, the spiders, they're not that far away from that spot. It looks like it from here on a 5-minute chart, but in reality, what are they? 80 cents away? It's not a big deal. They can go there. I'll tell you when I'm locked and loaded, Jorge, absolutely. But here's the catch is this. This is the way it works. So you have to understand from my perspective. If I say that, there are traders in here that will utilize too big of a position size because I said it. And if I'm wrong, it hurts. So it's very hard for me to say it knowing what's going to happen on the other side. I know that there is a cause and effect with that. So I have to be careful. Good job, Nick. Shannon got both CVS and CNC. Well done. Jacob, 500 bucks in CNC, trailing stop. You got to love it. That's fine. That's the way it was supposed to work. They don't all work like that, but that's the way they're designed to work, and a lot of them work like that. Let the spiders go. You can't ride it up there. It's very difficult. You don't know that they will get there. And this is the concept that we have to talk about each and every day so that you understand. We don't know that they will get up to 438, give or take. But what we do know is if they do get up there, there's a likelihood of overhead resistance, which means A, first, they stop going higher. That's what resistance means. B, the next phase of resistance is they're either going to go sideways for a while, eat some time off the clock, or they're going to get rejected up there and give you a pullback. So that's the concept of we don't know they will, but if they do, it's a place we're willing to take action just to lay the thing out. It's just for a trade, right? Remember, we're in an uptrend. So the shorts are harder, not that they don't exist, they do. But the shorts are harder in an uptrend because they can torture you. There's not that many sellers around. But 437.90 to a spike of 438 is that first place. No change. Nick, I'm not sure what we're talking about there. We're talking about the trade's over. CVS is trader's choice at this point with a trailer, and it was a buy the stock, it's not an option play. I think we talked about this yesterday. These stocks on the move are not really designed for options. They're designed for scalps with potential, just like the ES trades. We're not talking about looking for a swing trade out of it. That's not the purpose of these trades. If you have a liquid option, so let me just drill down on that a little bit. And I didn't take a look at the CVS options. I'm not sure how liquid they are, but let's say it is a liquid option, which means it's got plenty of volume and the spread is narrow, not wide, like 50 cents or 40 cents or 30 cents. That's a no-no for stocks on the move for sure. But if you have a liquid option and you want to do that, knowing what the risk is, that's your choice. That's fine. But the illiquid options, you have to stay away from. That's the caveat. You can do it with liquid options. So CVS may have qualified. You got to look ahead of time. You got to see what kind of volume that the nearby strike prices have, and you can. But most of them won't have like weeklies or anything. They'll only have monthly and quarterly expiration. Most.
I looked into it once, and even with some options, like unless it's stocks like Apple, the spreads when you first open, because stocks that drop, they're trying to find price, but so are the options. You'll get blown out. It cuts the win rate like by more than half.
What we talked about yesterday. Thanks, Jordan. It's you can do it, but it adds a whole nother dimension of risk. It's not really that wise. Thanks, Nick. Just here to help you, I promise that. Not trying to dissuade you from doing anything, trying to give you the right information. Everybody, not just Nick. Go. They'll get there. Or they'll come up short, but they're going there. 7, give or take. It's now going to be some short-term support, just for the record. Yeah, well, that was it. We were looking for a short up at 437.90. It's still on the table. It's just very slow. It's just the market they're giving us today. And without big time fanfare around the PPI, the only thing you have is, and these are the air quotes, we're waiting on the Fed. That's it. So don't expect a lot of, action before the Fed meeting this afternoon. It's just the way it is. And it's these days when you, as a trader that may have an over trading issue that you're trying to resolve, it's these days that test your patience. You have to be willing to sit it out and say, unless they give me what I want, I'll just sit it out. Right now, if they don't give me 437.90 or above, and they hang out here for a while, I'm sitting it out. I'm fine with that. Come down to 437. If you want to initiate a scalp trade on the long side, you'll probably get a bounce. 437, 436.85 in that zone. We could say that now because the tape is really quiet. This is the type of tape that warrants a bounce over there, in my humble opinion. Is it guaranteed? No, but that's the number for now. And with that type of scalp, you're not looking for 5-7 points. You're looking for 3 to 4. You just couldn't resist shorting Tesla, could you, Will? That's fine. That's a nice job, 1,200 bones. Nice job. I don't know if you got a trend change, Will. It's down $1, $2. I wouldn't call it a trend change. I would call it a pullback. And I would just recognize that there's an element where you got a little lucky there. So I would recognize the difference between lucky and correct, just for the record. Again, I'm not hurting you, I'm trying to help you. No, it doesn't, there's no such thing. I mean, I would just say it's a pullback. Leave it at that. Just part of the rewiring of the brain, how we look at things. There was no trend change in Tesla, just for the record. And it doesn't matter what we call it. You made money, move on, that's fine. But you have to realize there is an element that you did get lucky with that because there was no reason to short it there. They just happened to pull back and you got in. And you need to recognize that, because the more you do that with the same information that you had this morning, it's not going to work most of the time. Yeah, Mika, you know what? Mika's kind of emphasizing what I just said, and it really brings it home. It says, recognize the difference between lucky and correct, and he's laughing, but it's not a, you know, it's not a real laugh. It's, by the way, it's important for traders, and that's in the comments. So the point is this: if you do the wrong thing and you get lucky, you think you did the right thing and you continue to do it. It's like using one of the indicators from Joe's indicator shop and saying, oh, it worked this time, so therefore it works. Well, they don't really work. They're backward looking data, and sometimes they work and sometimes they don't. And because sometimes they do, and it's in your system, so you think, it's kind of like when someone's on TV, oh, they must be smart. Well, it's not necessarily true either. Just because an indicator's in your system doesn't mean it works, right? If it worked and everybody knew about it, they'd be using it, making money. It doesn't work like that. So when you use it and it works, you get the false sense that it worked, you made money on the trade because of the indicator. Right? Not necessarily always the case. Let's take a look, Armand. Yeah, that was, let's check that out. I got to double check that work. It doesn't look the same. No, that's no good right now. Is it? No. No, this is, no. No, now you got to wait. That's the first spot. 21.65. You got to wait. There's no good. What happened to CVS? Okay. CNC. Yeah. That's why I put the first number back on the board. And you know the drill. You get above the first number, start closing candles above, there's a whole new situation going on, right? Where would they go first? 65 and a half. 65 and a half. Why? Market ran up to this place and was rejected. And then it went up. And that's just about the spot they got to. It's important because the market told you it's important. So when you look at this and you say, well, let's just draw a line over from this spot. And it's, again, it's not an exact to the penny. Is it 65.50, 65.25? It's somewhere in there. But that's going to be overhead resistance also, because if they recapture it, it opens up the door for 66 bucks. So that's the way I'm looking at it. No, uranium is down because uranium is down, Paul. Not because Iran ran out of money waiting on a debt ceiling deal. That's not why uranium is down. This is the thing that I discussed, since the beginning of time, which is the news is not relate. Okay, fair enough. It was a joke. Okay, I got you. I was going to have to go through my news is not, the related to the price all the time conversation, but all right, we'll go with that was a joke. Thank you. Yeah, it didn't sound right, Paul. This is bullish pattern, Qs, just pushing up. Next number, 364.45. Spike the high and drop it back down a little bit. Is it scalp worthy? Maybe. Do you have to have it? Shorting the Qs is a touch different than shorting the spiders. They're just in more of a melt up. That's all. All right. They're trying to creep up there. Again, it's a creeping market. Caveat emptor. If you have to have a short, that's the spot. If you don't want to short a dull tape in a creeping market on Fed day, then don't do it. It's a trader's choice. This is not a have to have. This is a want to have and need to have. Right? If you have to have a trade, this is the one. If you don't, leave it alone. I'm not saying that indicating I'm thinking it's not going to work or anything like that. Don't misread the comment. The comment is, don't short a dull tape in a creeping market. It's not really a morning rush. So we have to recognize that. However, it's a resistance area, and under normal garden variety conditions, they're going to react up there. You have to do what you're comfortable doing, and we talk about this every day. If you're uncomfortable in a position, you're going to likely make bad decisions while in the position, and it's a recipe for not a good result. Yeah, Mark, nothing's really changed. It's still the zone. I think what I said before I read your comment was almost the same. I said creeping market, you said eating time off the clock. I'm going to say they're close to the same in this situation, so we're on the same page. Now, of course, they just came up short. That's garden variety. What did they get to? 85 so far. Okay, here we go. Showtime. For those that want it, it is showtime. Be right back. Remember, they can push up into this a little bit, but this is a resistance zone. So the concept is first, they stop going up. They spike it a little bit. Maybe they get up to 438 and a quarter or something like that. But running away to 439.45 is not necessarily the worry right now. Grinding up would be the more likely thing. But they just picked up a little speed when they got here, which means that there's action going on up here. So it's an important place. There's your 438.05 and then some. Q's got to their number. What are you looking for in this trade? You're looking for them to pull back and give you 5 points, give or take. The rest, you can hold it. But you're looking for minimum of 4. You're really looking for 5 points. Yeah, that's fine, Patrick. Whatever your reason is that makes you comfortable or uncomfortable, that's the correct answer for you. You're looking for 437.50. That should happen, but famous last words. You're looking for 437.50 on the initial pullback, when they pull back, if they pull back, or in front of it. You know the drill. As long as they stay above 437.90, they're going to float, come back below, and they'll pretty quickly drop 50 cents, 40 cents. Just maintain patience. We don't get excited. We don't pound the table. We don't yell at it. We just use what we do from a strategy and mechanical standpoint. It's a process. Right? Wait for our stuff. They're not all going to work. Many are going to work. And we just do the same thing over and over again with the full and complete understanding that once in a while, it's not going to work. But we keep doing the same thing because most of the time it works. Remember what we said before, because I want to reinforce it. What is resistance? Resistance is first, they stop going in the direction they're going, upward. Support is the opposite. Even if it's for a little while, it stops the tape. Okay, the second phase is they either pull back or they just go back and forth sideways. So this 438, give or take, so far has been short-term resistance, just for a few minutes, but it starts somewhere. Whether it's 437.90, 438.05, it's a very small zone, but that's a 438, give or take. Am I on mute? Was I on mute? Or are you on mute? I didn't think I was. No. Mike, no. Thank you. Appreciate it. Well, Jonathan K asks, where should the stop loss be set? Well, there's a zone between 438, give or take, and 439.45. So that's on the board. We talked about that. And so therefore, if you're not willing to buy again or sell again, if you will, in the zone halfway or at the second number, then you can't sell the first. So if you're a one-trick pony or a one contract player or a one entry type trader, then you have to wait for the higher stuff. If you're short now and you're not willing to ride it up, then you have to pick a number. But I have a zone. And we talked about it before we got into the trade, which is they could spike it up to 438.25 on a spike, all that stuff. But this is overhead resistance, so they should stop going up, which they did so far. But if they continue up and you fall into that category of a one entry player, you have to make a decision, or you should make a decision now. And you never put a stop loss in the system, Jonathan, just so you're aware of that. They'll come and get it if it's close. See you tomorrow, Jorge. They don't, Paul. Nobody in a big institution is sitting there with, millions of dollars looking to trade the Fed announcement. That's not what happens. It's the movement that you see after, during, all that stuff, that's computer generated, most of it. And, retail people like you and me, but big institutions aren't playing that game. That's why I don't play that game. How does the market know where your stop loss is? Once you put it in the system, it's shown to the market. Everybody can see it. You could see where orders are sitting. Not you, maybe, but they. Certainly the computers. Okay, Mike. That's fine. No worries. Same 438. There's nothing going on up here just yet. By the way, just so I get this out before I forget, if you are watching the Fed and you're interested in taking a position that would be a swing trade position, in my opinion, even if it's just for a couple of days, there's a number where if they spike them up and they just had a rip roaring rally and they had one of those 100 handle S&P days, 120 handle S&P days on the upside, if they're doing that, 452 on the spider, give or take, is a stone cold short. Just put that on a sticky note. It's unlikely, but anything can happen, so you might as well know about it. Carmine, why do we concern ourselves with the pivot on some days and not others? Because some days we don't have one or need one. Very quiet day like this, there's no pivot. The market is basically floating higher, and it's a good question, by the way. As it continues to float higher, as it has over the last several days and all that stuff, you have less and less of a pivot type of place, because the slightest thing can pull the entire rug out. It's not the same, at least not the way I look at it. When the market has more activity in a space, so let me go to an example. Okay, so when we're doing this, okay, I can find a pivot that will kind of send the market down to another level or up to another level. And you see how they traded around something here, and it doesn't matter what it was at the time. It's just there was a pivot in here, okay? But now, where's a pivot? I don't really have one. I mean, I could say that 435 is a pivot. I didn't say it today, but I could say that, and we would be correct. Because if they start closing candles below 435, notwithstanding the fact that this low over here is slightly below, but 435 is important, that would open the door for lower stuff, namely the gap and potentially lower. So we could call that a pivot. So, but the answer is I don't necessarily look at it. Each and every day is different, and some days I just don't see a standout place that tells me the market is going to turn bearish for a while or bullish for a while. We're just kind of in a melt up, and that's really your answer. And it's not a great answer, but that's the answer. It has to do with the melt up that we've been seeing, really. IWM relative weakness, and you are correct. Why is that? Now here's my answer: because they got into a resistance zone, so they stopped going up, at least temporarily. Now they're eating time off the clock, but nevertheless, this is an hourly chart. This is just day 2, so we don't know. But this is a resistance zone, which is why they stopped going up. That's my answer. Somebody else has a different answer. Everybody looks at the same information, but comes out with their own interpretation of what that means or what it is. Jerome, it was 452, 452, stone cold short. Don't look for, I mean, it's a, if you had to assign like what percentage chances this have to happen today? Very, very low, single digits at best. But you never know. Well, that's a good question, Nick. So this will teach you how to do it. So let's do it together. So Nick's question, well, by the way, We'll get back. Remind me in a few minutes if I don't get right back to that, Nick, but I want to focus on the spiders, okay? Because they're coming down, right? So they're at that 50 place. So your scalp is done, okay? The rest is trader's choice. You could hold for more. They can get to 437 or lower, but now it's a risk-free, emotionless trade. Those that took the short, well done. I'm going to go update the notes. We'll be right back. So what was the low here? 50 on the button, 49. Funny how that works. Okay, so everybody knew what the game was. Should have taken a scalp off, and don't let the rest go bad on you. It's not that important. It's just a base hit, okay? I'm not sure how you got 16 points out of that lead. Maybe you wrote it up also. I'm not sure, but whatever you did, nice job, obviously as a profit. Yeah, Mark, that's it. It was 4 or 5 point trade. That's fine. That's all it was. Remember, if I say it's a 5 point trade, give or take, right? You say, okay, that's my expectation for the trade. I'm not looking for 10. If I get 10, fantastic. But I'm going to take some off, make sure I book some profit at the 5 points. Nice job, Jeff. That's great, right? 5 points, 3 contracts, right? What does that smell like? 750? Or no? What is that? What was that, Jeff? 450. No. Mark's in for 450. Jeff, what was that? I'm having a mind blank. Yeah, 750. I was right. Yeah, I don't know why I questioned myself. Sorry about that, folks. Okay, Shannon, nice job. 1 double, 2 singles, and 3 risk-free motionless trailers. How do you like that? Love that. It's not bad for a quiet day, right? You get something in the books. You had some stocks on the move opportunity, something for everybody, a short opportunity. I'm not sure if anybody rode the long, but that was your own if you did. Nice job, Grant. Well done. Nice little day. For a Fed waiting on the Fed day, this is pretty good. You come in saying, all right, if I get something great, if I don't, I'm not worried about it. All right, let's get back to I think it was Nick's question before, which is how do you figure out what 452 in the spiders and the stone cold short if they did it? How do you figure out what that is in the ES? So ESU 2023, which is the September contract. All right. So what we're going to do is we're going to say, all right, let's take an hourly chart. Okay. And let's say let's actually do it this way. Right. Nick, are you there? I just want to make sure you're listening so we go over this because it was your question. Okay. So here's the situation. So we know that they're the same vehicle, they're just different. Okay. But they track the same thing. So they're going to move together. So we have to figure out what the price is and how to get there. So we're going to take 452, and we're going to subtract where we are now. We're going to say 438 minus 438. That's 14 points. 14 SPY points, which is what? The ES is a multiple of 10 to the SPY. So what does that mean? That means it's a 140. It's a big number. That's why it's unlikely, but it could happen. 140 ES points. So you take 140 and add it to where we are. So where are we? 44.28. 44.28 plus $1.40. You're at 45.68. It's give or take. 45.67, 45.69. You're going to be in there. And that's the way you do it. And if you're doing it on that's a big number, but nobody is swinging the ES short. Right, Kyler. You're right on that. Some are. I shouldn't say some are. I don't know about in here, but there certainly are traders that will and do. I don't like to hold the ES overnight. I don't like to know what's going on. I like to just be not watching it. But here's the thing. Let's scale it down to something that's not so wide so that we make sure we understand it. So let's say we're talking about shorting the market at 439.45. So we'll do another example. 39.45. Where are we now? Where are they now? 437.90. 437.90. That's $1.55. That's 15 and a half S&P points. $1 is 10 S&P points. $1.50 is 15 S&P points. So $1.55 is 15 and a half S&P points. So we take 15 and a half, 15.50, and we want to add it to the current price, which is where? 44.28. 44.28 puts you at 44.43.50. That's where the short would be in the ES, corresponding to the same price in the SPY. How we doing, Nick? There you go. We're in the September contract, Paul. By the way, just based on what the market's doing here, I don't know if they're going to fall or stay here or do what. All I know is if you got a base hit, it should be over. That's what I'm saying. It's just that kind of day. And by the way, back to Kyler. Kyler's comment was nobody's swinging the ES short, right? So he's asking, but he's assuming that there aren't. In here, probably not, but let's expand on that a little bit. Why not? If you bought an exchange traded product and you put out the capital and you bought options and you put out the capital, each have a different capital outlay, each have a different level of risk, each is a little bit different from each other, but they all track the same thing. So the ES, just the same, gives you an opportunity to get out if they hit a number, for example, overnight, if you want to do that. But it's just one and the same. I used to do it. I used to hold ES overnight. No big deal. I'm not holding a tremendous position overnight, but they can move overnight. But if you're right, they can do what you want them to do, and then you don't have to worry about the pre-market thieves or the aftermarket thieves. So there's something to that, but I don't do it anymore. I don't want to know what's going on overnight. I don't want to be tempted to do anything overnight. I just leave it alone. I have enough during the day that I don't have to worry about what's going on at night. Yeah, that's another way, John. And I have done the formula each and every morning in the past. In fact, I used to post it for Inside the Number members. I just stopped doing it. But frankly, for most folks, this is just quick and dirty. It's easier. But I understand what you're saying, and I put it on a spreadsheet and all that stuff, and it was easy. Both work. John's talking about the formula where he takes a 15-minute high in the ES candle, divide by the same 15-minute high candle. I'm not sure what that exactly means, but I did it a different way, but we come out with the same result. And he's just doing a formula that we've talked about before. Yes, Nick, you can use MES, and that gives you an opportunity to have more entries and exits, because you're never going to, I shouldn't say never, but when you're testing it, you may be playing around with 2 or 3 contracts or whatever. But in terms of the MES, you can do them in lots of 5 or lots of 3 or lots of 2, and you can have multiple entries or whatever you want to do. And it gives you an opportunity to get the process down with not having to put out all that risk capital while you're getting comfortable. That's why I've discussed that before with the MES and how traders can use it that are coming from the options world because of the capital restraints they may have. And the MES actually gives you a better process for doing the trades with less risk than options, in my opinion. Because most traders were trading the near expiration, same day expiration options. Talk about that, all the time. Very hard. See you, Nick. This is going sideways in a bull flag pattern type of thing, right? It's not a perfect flag, but it's got that look. And this is grinding higher. The reason that this is going on is because they hit overhead resistance. What do we talk about first? They stop going up first. And then if they eat time off the clock for enough time, well, they can continue higher. And, I talked about this and I expanded the range a little bit for traders. Just call it 190. They can get up to 190, 191, something like that. Sure, they can, but this is an overhead resistance place. It could take a while. That's why there's a different look, because the spiders really haven't reached their, big time resistance area. This was a big time resistance area for the IWM. Talked about it long before they got there in the videos. I don't see a flag in the transports. 10-minute chart. Yeah, not so much. It's just grinding. It's similar. You're right, but the shorter the time frame, the less it's reliable, right? You look at this and you say, well, they're just grinding higher. They're just grinding higher. They're just grinding higher. Yeah, they went sideways for, what, an hour? No big deal. That's just the shorter the time frame, the less reliable the chart look is, because when you have this, well, it's telling you the same thing. I mean, this is telling you that it's building energy to go higher, and this is telling you it's already going higher. It's one and the same. But yeah. So do we expect a collapse right now based on the fact that the transports are going higher? IWM's flat. They're not doing anything. No, the market's just stuck. This is expectations today. Nothing's going to happen before the Fed. We're done. I can almost guarantee it. Unless they ran up to 439.45 in the next hour. Then they could. But then you say, well, I got to make sure I'm not in a position around the Fed. I don't want to be caught with my pants down. Armand, 366.35 is the next place I have. Armand is my momentum trader. You're welcome. He's just going to keep doing it until it doesn't work. He's been doing it for weeks. Right, Armand? Andy, how you doing? Yeah, Armand, that's fine. I know what you're doing. All good. You ride him until she throws you off. ANF, Abercrombie. Not sure. Let me look on my bigger screen so I get more of a chart. I'll be right back on that. The to 37.15 is the resistance zone that A will draw price in and B is overhead resistance. ANF, Abercrombie. You're welcome. What's going on with the spiders? Nothing. 438. What's overhead resistance? They stopped going up. Obviously they did. 45 minutes already. Nothing you could do with it at this point. The trade was the trade. It's over. That's it. All right, I'm going to walk away for a few minutes, folks, and put the sign up. Take a break. All right, be right back. Okay, I'm back. I just read your post, Mark, and I appreciate that. I'm going to read it out loud if you don't mind. I think it's important that everybody hear this. So Mark writes, every day in the room, thanks, Mark, every day in the room, and he's in day 8, and the bad habits and mental scars from the previous trading room I was in are slowly disappearing. Calmness is replacing fear and anxiety, getting angry, etc. Since I've joined the room, I've begun the process of stripping out the previous habits also, Discord, trade chat rooms, indicators on charts, basic distractions, and distilling everything down to the numbers and just being patient in my skin, being in a trade or not. Thanks, this room, me, you, were the last chance at trying to make this trading a soon-to-be post-real job retirement, 9 months till retirement, and I'm wishing you congratulations in advance. It's an opportunity to make money. So that's what Mark says, and I appreciate that very much, and if I can help, it makes me happy. Again, different stage of my life. Mark, do me a favor. I can't cut and paste out of this chat box that I have. Cut and paste that if you can and send it to me in an email or post it somewhere. I don't know. Send it to me in an email. I want to save that. I think that's important. Please. I'm assuming dope is good, Grant. I'm old and I know what it is. And I thank you very much for that. Mark H has almost doubled his account in the last week. Wow. $600 today. That's fantastic. Especially since there was nothing going on, right? How many traders actually did anything today overall, not just in here? Who knows? That's fine, Mark. I appreciate it. Retraining your brain is hard. It's a process, Paul. And I know you're having struggles with it. I get it. You got to take what Mark said to heart. You got to take all the distractions away, all the other stuff you're listening to. And I know there's a ton of it. I know who you are. You're not unique. Meaning you are unique. We're all unique, but your issues are not unique. And I know what you're doing. You're looking at a whole lot of stuff. Listen to a whole lot of people confusing you. Well, that's something else. Even with his struggles, he's 4x'd his account in 3 weeks. I don't even know what to say, Paul. Doesn't sound like a problem to me, but I understand what you're saying. Thanks, Mark. I appreciate that. Well, that's a really great strategy, Ron. So I'm going to read this one out loud because it made sense to me as soon as I read it. I took the trade today because I had a good day yesterday. I knew I had the profit in my pocket and just risked a portion, meaning a little of that profit, so anything was a bonus. And that's the way to go. Took what I said about taking a trade in the afternoon, saying if you have to, just risk a portion of the profits from this morning. And he did the same thing overnight. And I appreciate that, Ron. Thank you. Now it makes more sense, Paul. All right, but you're not in a bad situation. You just need to adjust. You're in a good situation because it can only get better. And we'll say that's short-term support. Yeah, okay, Paul, I got it. It was a good suggestion. Anything that anyone, pardon me, anything that anyone wants to discuss, put it in the box. Because it's so quiet, we might as well have a discussion about something. But I don't want to pick a topic. I want you guys to pick a topic, guys and gals. Yeah, Jesus, you're 100% right. You need to assess the risk. Like for some traders, I might provide a zone that's uncomfortable for them because it's too wide. So you have to wait. You have to back into it's too much risk for me. I'd be out of the money by so many points with how I trade. If I'm trading the ES, to say, I'm not going to do that. I'll just wait for a higher price. And if I don't get it, that's fine. That's assessing your risk and acting accordingly. I agree with that. Every trade. How do I come up with my numbers in the spider? Well, I use everything in the book, Michael. I don't have one thing that I say, well, here it is. It's X plus Y divided by VX9 equals the numbers in the spider. I don't have anything like that. Every day is different. It's a lot of work. It's a lot of precision. Well, I use market cycles. I talk about them in the videos. I'm assuming you're aware. Do you have anything specific about cycles? Yeah, okay. Yeah, there's a lot to it. I mean, it's really a combination, like everything else that I discuss and teach for the most part. It's really a combination of a science and an art form, cycles. So you could say, keep it very simple. Hey, there's a 60 period cycle, a 90 period cycle, a 100 period cycle, 50, 30, 15, 180. Those things exist, but you have to find them. And the way you find them is you go back on the chart, and this is kind of where the art form comes in. You go back on the chart, and let's do one. Let's just do an example of a simplified cycle. Yeah, I think that's what I said in the video last night, Phil. Let me see it. Oh yeah, I didn't even see that. I didn't see what was going on here, Phil. Now I do. Yeah, 14.8 to 15. That's the next stop. So the transports are up 1.6%, 228 points. That's a big move, considering everything else is flat. Canary in the coal mine? Good pickup, Phil. So let's go back to the cycles for a second. Let's just go back in time. Let's just pick a place. Let's go to the pandemic low. Where was that? I need a weekly chart. All right, there we go. So we know that's an important low. So here's what we do. We say, how many trading days or how many calendar days, you want to know both, from that important low to the next important high. Where was the next important high? Well, it was here, January 3rd, 2022. So you count that stuff up and you say, okay, if the market thought that was important in time, then will that be important again in the future? And it doesn't have to be another high, but it could be now the same amount of time from high to low. See what I'm saying? So how many, I don't want to count this up. That's too many to count, but 2, 3, 4, 5, 6. Actually, let's do it this way. Let's just do an estimate of time. March 23rd to January 3rd, right? So what is that? 22 months, a little short of 22 months, 21 and a half months. We'll call it 21 months, a little over 21 months. Funny how that works, isn't it? You're starting to see the point? If you've taken the course, Lazy E-mini Trader, you started to see the point. 21 months from January 2022 would be into 2024 or end of 2023. What, October, November, right? Maybe we'll see an important low. Everybody get that? Anybody get lost in that? That's just one thing. That's 1% or less than 1% of what you can do with cycles up and down the line. Time, dates, seasons, years, there's all kinds of stuff. Well, I'm not saying could be a low, Kyler. I'm saying could be a high or a low. But it's a full turn from, it doesn't have to be a high, it doesn't have to be a low. Let me put it that way. But it could be an important turn based on the fact that if we're in a 21 period cycle, if you will, based on the, look, I didn't do it to the precise day or week even. I just rounded it. And I'm just trying to give an example. So from high, generally the next thing, it's the law, if there is one, I believe in it, the law of alternation, which is the next thing is the opposite. So if you have a high, the next cycle on that cycle should be a low. That doesn't always work like that. I don't know, Jesus. Most likely. We'll see. It's really hard to say because things could change so quick. The question is, do you think the low is in for this year? It's just an opinion, right? So here. So this is, well, is this the low? Well, one of these is the low. Okay, so this is the low. All right, so the low is 377, 378. All right. That's a long way from where we are. There's a lot of stuff in between where we are. If you just take the low to some high, let's just say the highs up here. Let's just say it goes to 252, 452. All right, then a 382 retracement is only back down to 412. 50% is 400. You're going to get action at those numbers somewhere in there. All right, 618 down here. So market's not going to go from here to here. That's a crash. That could happen, but it doesn't happen that often, right? So to say that we're going to be below here is really impossible to say now. I would say it's unlikely. But that could change if we're down here. I may say something different if we're down there. How did we get there? Did we get there in like a week? That's a whole different ball game. See, so it all depends on what we do, how we do it, when we do it. It's not the perfect answer, but it's the answer. Thoughts on morning high being in, I missed getting out of a small short. Oh, come on, Joel. You let it go bad. Okay, you were distracted. Okay. Yeah, I mean, that's trader's choice. First loss, best loss, Kyler says, which I agree with. Unfortunately, you're in the position you're in. It's not that big of a deal. I mean, it's a loss, but it's not a catastrophic situation here. You're out of the money by 50 cents. But the trade is over. So now it's a hit and hope, right? It's just a hope, and I don't like that. I'll be right back, folks. 30 seconds. Same routine up at 439.45. If they get there sooner than later, it's the same type of opportunity as before, meaning under normal garden variety conditions, they should react up there, but take into consideration, do you want the short? That's a trader's choice. Can't buy it to get up there. You don't know they will, but when they do get up there, if they do get up there, it's an area where they're unlikely to get to 400. They're likely to come up short. 439.45 is the place. And you can call the zone a spike of 400 up to 440, sorry, 70. All right, if you want to do that, but that's unlikely. Trend line of the lows today. Let's see, Brent, maybe do something like that. That's the only thing you could do. It's not wrong. Yeah, you play around with it. Again, this is part science, part art form. It's something. You know, it's interesting when these things intersect the numbers at the same time. So let's just say that this went up or whatever, rolls over, comes down here a couple of candles from now, and it's right in this intersection. You know, you're going to get a bounce there most of the time. First time, best time. Okay, Brent? I think that works. Sorry about that, Joel. I know that sucked, but you know what happens. First loss, best loss. You were away or got distracted, didn't take the exit, and here we are with a pie in the face. You don't need that. Look at it as a cost of doing whatever you were doing before, unfortunately. Happens to everybody. And one of the reasons why I don't take every trade with you all, and I'd rather focus on doing it for you, because I get distracted both directions. So I'm watching my trade, I'm not watching for you, and then, or I'm watching for you and I'm not watching my trade, and I end up, you know, with less profit because I wasn't paying attention, or even a loss on a remaining portion of a position because I didn't pay attention, all that stuff. Forgot I was even in the trade sometimes. So just function of the business. Look at the transports go. My goodness. The 15-minute chart, let me see that. Yeah. Nice spot there, Mark. You're coming into an on-time situation. So here's what we're going to do with it. On-time situation at the number enhances the viability of the trade. Doesn't guarantee anything. It enhances the viability of the trade. Michael H. Well, you can hold for 440, or you can mark Michael H as long. Okay, you can hold for 440, or you can hold for 439.45, which is my number. It's up to you. Sure. You're welcome. Speed, just like before, when I see that, to me, it's they're going somewhere and they want to get there. They're picking up speed because they can smell it. It's magnetic. It's drawing price in. That type of concept is what I'm trying to convey. And that gives me even another piece of enhancement, if you will, that I'm onto something, they're going somewhere. If I have the number right, and then you throw in the on-time situation, it's usually a pretty good opportunity. The problem is there's always another side. The problem is you're late in the morning, you're in a melt-up situation, never short a dull tape, they're creeping, you know, even though they picked up speed, it's all relative. They've been creeping all day. And, you know, never short a dull tape is still the thing that is on a sticky note somewhere near you. And so you have to make that decision for yourself. Do you want it? Do you have to have it? It's up to you. I'm telling you the thing, but then you have to take into account whether it's right for you. You have to be comfortable in what you do. Let's see, we've got some other commentary here as they head toward it. The highest probability setup, Steve, and I appreciate the other commentary. Thank you very much. Stevie H, the highest probability setups, if there are any, are take what we're talking about right now, okay, but flip it around. You're in an uptrend. The market is in a pullback type of situation. You're on time, you're at a number, and there's participation, meaning it's during the morning rush, let's just say the first 90 minutes of the day. That's like my ideal setup, okay? You're in an uptrend, the market is going up, it's at a number, on-time situation, all the same stuff, but take away the first 90 minutes of the day, take away the fact that the market is not pulling back in an uptrend, It is actually continuing higher. And those two things taken away from the situation of the pullback operation, those two things make it less of a highest probability type of trade setup. Does that make sense? And there's like, tons and tons of different types of setup, but the ideal one is the first one. You want to go with the trend, ideally. Not that you can't trade against the trend. You can. We do all the time from an intraday perspective. But the ideal situation is a pullback and an uptrend. That's really ideal. Yes, I was, Mark B. Pull back a little bit. They didn't get there. That's doesn't mean they won't get there, but you know how they do what they do. That's why we have to have patience. See, what traders tend to do, and I've done it, so I know because I'm a trader. So what traders tend to do is, in this scenario, for example, without me as your alter ego telling you not to do it, what traders do is they'll see the market get to a place they were interested in, if they had a place, or they'll see it start to pull back and they'll say, oh, they just hit resistance, they're going to pull back now, so I'm going to hop on. And they buy a short position in a situation like this, and then just as they enter the position, the market comes down another 10 or 15 cents, and then it goes back up again, and they're wrong. And that's why we wait for the numbers. And if they don't give it to us, we're okay with that, because we don't want to chase the market around, because when we chase the market around, we're going to be wrong more often than we're right, because our emotions are causing and forcing the trade. When we trade on emotions, we add another dimension, another one of those variable risk factors that we don't need. That's why I always say mechanical. You have to take as much of the emotion out as you can. A lot of the emotion comes from having too big of a position size. So trim it down. Prove to yourself you can do it mechanically, and then go back up a little bit at a time. Yes, it can, Shannon. And that's not off the table. Meaning, everybody sees the market going up and it's melting up, and there's not a lot of bearish stuff going on out there, and then all of a sudden they pull the rug out after the Fed or tomorrow. Can they do that? Absolutely. Nothing's off the table. I don't know what they're going to do. No idea. Not going to even pretend I know. When I say what they're going to do, what the market is going to do, the market is made up of participants. So what they is the participants in the market. What they're going to do after the Fed, nobody knows. Nobody. Anybody tells you they know, they're guessing. And if they're right, they come back and say, I told you so. And if they're wrong, everybody forgets about it. And this was what I was talking about before. They start to pull back, you say, that was it, I'm hopping on, and then they're right back up. That's exactly what I was talking about. That's chasing the market. We don't do that. They either hit our number or they don't. And when they don't, they'll do something else later or tomorrow. There's another trade around the corner. Once you can rewire your brain to accept that, your results will skyrocket. You'll stop doing the chasing and the stupid stuff. And I'm not calling anybody individually stupid. We all do stupid stuff. I've done all the stupid stuff for all of us over the years. It's how I learned the hard way. School of hard knocks. And I'm saying that as a truism. Nice job, Armand. I don't know what you did, but well done. I think you could see the writing on the wall. We're going to wrap it today. I'm not coming back at 12:15. There's nothing to come back for. This is Kabuki Theater Day. It's a spectator sport. Anybody wants to put on a bet, that's up to you. And that's where we're going to leave it. It's just the type of day it is. Each and every time there's a Fed day, they're going to look like this most of the time. Sometimes you get some trades in the morning more than we got today, but by the time you get to this time of the day, they're going to look like this, leading up into 2 o'clock. Thanks, John. That was certainly viable. Let me read what John wrote. John D. wrote along from 437.90 based on hanging out there for a while. So they're eating time off the clock, kind of a bullish flaggish kind of thing, right? So that was viable. The risk wasn't that far below, so he knew that. And the canary, the transports were moving up. So he took that information And I called him a canary in the coal mine for years, every single night in the videos. And he took a base hit. Nice job, John. That's what I mean by we all have the same information in front of us. We all use it how we're comfortable and in different ways from each other, not always exactly the same. You're welcome. Nice job, John. John knows that the transports are canary. We talked about them. They're screaming compared to everything else, relative basis. And it was a pretty good risk reward. It was a buy high, sell higher. It's a very tough trade, but well done. Now, I couldn't say to the group, do this, because as soon as I did, they're down at 437, and now I have to work out of the trade because I bought it based on eating time off the clock, but knowing that they could have obviously went the other way, and John knew that, but he was likely willing to buy down at the support zone. It's not a trade that on a day like today I was comfortable with, or would have been I didn't even think about it, would have been comfortable with putting you all in this kind of a tape. That's an individual decision. Never crossed my mind, honestly, to be long from 437.90, knowing that the next number was higher. There's no guarantee they get there, but an individual trader wants to do that. That's an individual choice with using the information that we have and doing what you're comfortable with. Nothing wrong with that. I always have to take into account there's a lot of you out there. Not a lot. I mean, I don't want you to get the wrong impression. You know, it's not like there's hundreds and hundreds of people in here. It's not the case. Okay. But things considered, there's enough out there to where I have to consider each and every trade, the group. And I say to myself, if they get to this place, I'm using the 80-20 rule, 8 out of 10 times, they're going to react at this place. All right. The other 20%, they're going to the next place. And guess what? That's the other side of my zone. That's the way I do it. Not going to work every day, not going to work 100% of the time, but it's going to work most. It just does work most. Not going to, it does. Let's see it, Joel. DG, there's the number. I had it at 151 on this. If I said 150, 115, I'm sure you're right. Let's see. 15 was a low. 27. It's pretty amazing, isn't it? I'm past the point where when I look at these, I say, how come I didn't have an order sitting out there for DJ? You know, I just don't do that anymore. Meaning I don't even think about it like that. There was once a time when I would do all the work and I would put orders in. I'd have tons of orders in during the day, and the majority of them would work when they hit. Not all right away, but they would work. But that's a different business. I'm sitting here by myself. That's what I'm doing. Just without this. Yeah, I get filled in 12, 15 orders a day. Now that's not over trading. That's using my strategy, my tactics, my numbers to have more opportunity using the same exact thing over and over again. It's different. It's not over trading. Anything else, folks? I'm going to wrap it. We had a good discussion today. A couple of trades, a couple of stocks on the move, one S&P trade. It's fine. It's better than sharp stick in AI on Fed Day. I'll tell you that. Would I ever host an in-person event? For what reason, Michael? I'm not sure. What, like, I'm not sure. Like an in-person class? I doubt it. Mainly because I'm a one-man band. So if I did that, then the rest of my business shuts down. And very hard to do for me. Well, I appreciate that, Michael. You're welcome. That's fine. I enjoy doing this. All right. I'm going to give it a wrap, folks. This is, it's the type of day it is. Just is what it is. Take the market for what it's worth, face value. So we'll come back tomorrow in uniform, ready to go as usual. And Kabuki Theater this afternoon, you want to make a bet, that's up to you. Otherwise, spectator sport. Just watch it. See what happens. How do you see the group chat? Oh, only I could see it. You don't want to see it. There's nothing in there you need to see. I read the questions out that need to be read, so you know what I'm talking about. Otherwise, I'm just answering a question that was only, you know, either you get it by the answer or it was just quickly for somebody individually. But yeah, I mean, if you saw the chat, it's distracting for you. There's no reason for you to see it. You don't want to know what other people are asking about. I'm telling you. And I don't read out everything because some stuff is just comments, and that's fine. But if you're watching that, then you're distracted and there's no value in it for you. Like, let me give you an example. This is for everybody that was wondering that. Let me say this. Let's say we're looking at the IWM, all right? And somebody says, I see support at 186. I'm just making it up, okay? Well, are you going to use that somebody you don't know said? Or are you going to ask me about it? And I know the answer. So there's your case for you don't need to know what other people are saying. Like when I see that in there, a lot of times somebody will say, I see support at, or I see resistance at, or whatever. And that's fine. They're doing their work and they want to see if they're right. And if it's off by a lot, I won't even answer it many times. Just because they see it doesn't mean I have to bring it up because it's no value to the group. I'm here for you as a group. So that's my philosophy and how things work here. Yeah, all that stuff, Mark. I'm not into that. I don't want to make this a circus where you got, you know, people commenting all over the place and everybody's reading it and re-commenting. And I tried to get a community going for that reason. And then I realized it's ridiculous. In 2 days, the community spirals out of control because of one comment and everybody's just distracted talking about that one issue that's not even real. So I realized that was stupid. Yeah, you live and learn. Not that many, Ilya. It's not a tremendous room. All right, last one I'll take a look at is AZO, and then I'm going to go. And fill a gap yet? Yeah, filled that white space by pennies and pulled back. That's all you got. Your support is down at 2,400, give or take, and your next spot is going to be all the way up here, 2460, 2470. That's it in AutoZone. Yeah, Sammy, me too. It's a bad experiment. All right, that's it, folks. I'm going to take off, use an opportunity to just take some time off. And we'll be back tomorrow in uniform, ready to go. Appreciate everybody. Not a bad day for Fed Day. I'll take it, and we'll move on. Right? Just pile up the wins. Base hits put you in the Hall of Fame. Appreciate everybody very much. We'll see you tomorrow. Enjoy the afternoon. Hold it, Armand, you still there? I saw your question as I was shutting it down. I'll do it. Hold on. That's the spot that came up just short. These numbers are fresh, right? So I've done the work and they've been on the board, but they're on the board because they're still important. So these numbers are real. Is that okay? Armand, you good with that? Okay, good. All right. All right. Once again, folks, appreciate everything and everybody, and we'll see you tomorrow.